Hello and welcome to the Expert Exchange. I previously sat down with Rick Rule, President and CEO of Rule Investment Media. He joined me to share his expertise as we look at the current economy and the markets as well as critical minerals.
When I look at the economy, I'm pretty nervous. The softness that we saw in the oil and gas prices is an example. Before the renewed conflict in the Middle East tells you that the economy is softer than people believe. You had flat to falling oil supplies at the same time that you had falling oil and gas prices. That tells you that demand is weak, and the fact that energy demand is weak tells you that the economy is weak. Similarly, the hiatus in the up move in copper, Dr. Copper, tells you that both the markets are afraid of impending softness in demand and that current demand is soft. So the prices of industrial commodities, the weakness in the prices of industrial commodities is troubling with regards to the economy. The macro political news around the economy isn't good either. Mr. Trump's tariffs, reduced to their most obvious, are taxes. And taxes are bad. They're also transactional policy. And I suspect that we don't need a transactional president or a transactional prime minister. Irrespective of my politics, it's very clear that the American tariff policy is bad for the American economy, and it's bad for the global economy. On the other hand, there are some attractive parts of the economy looking longer term. The most important is the continued advancement in various technologies, including artificial intelligence, which will be hard on those people who don't know how to add value, but will certainly lower the cost of producing goods and services in much the same fashion that, as an example, the internet or the telephone lowered the cost of producing goods and services. I guess the bottom line is the same that it's always been. Amazingly, technology allows individual human beings, with their creativity, their tenacity, their hard work, to fund our collective stupidity. The markets over time usually win out over government to the benefit of all of us.
Now, let's just shift to the critical mineral space as well during this economic time. What are some things that you're seeing there?
Well, that's a very interesting question. We're beginning to see the anti-globalization, the division of the world into strategic trading blocs. And that has profound implications for critical metals and for things like rare earths. Fabricators, Asian fabricators, non-Chinese Asian fabricators, Koreans, Taiwanese, Japanese, as an example, feel the need for independence from the Chinese supply chain. North Americans feel the same. The Chinese, of course, feel the need for independence from the North American supply chain. We had a period, let's call it 1982 to 2022, an era of increasing globalization, increasing free trade, or let's just say less restrictive trade barriers, global financial flows, things like that, a very benign time for the world. That's over, sadly. Beginning in 2022, I think that you're seeing the worst aspects of nationalist economic policy replacing fragmented globalism. That will be probably good for the producers of industrial and strategic materials, particularly industrial and strategic materials that are located outside the Chinese orbit. Good in the sense that the bureaucratic delays that prohibited development are quickly becoming a thing of the past. Good, too, perhaps, for shareholders as opposed to taxpayers, because it's highly likely that governments will choose to subsidize the supply chain, stealing money from taxpayers to reward shareholders of deposits of critical metals that are not part of a competing supply chain. You saw very recently in the United States something that I didn't think I would see in the remainder of my lifetime, which is to say a uranium mine in the United States where the permitting process, soup to nuts, took less than a month. By way of contrast, the resolution copper deposit in the United States is still not permitted after 27 years of effort. That is a change.
Well, and there's also, I mean, we're seeing that in Canada as well. There's a lot more things happening in, a lot more quicker time span. Also with the development of things like AI. I know Verified Technologies. I chatted with them last week, just in terms of being able to figure out quicker, what's there and make use of the data that was once just, maybe thought of as not helpful. So there's just a lot of things I think that are happening in that regards. We also need these critical minerals. So, whether I guess the red tape was slow or not. What do you think about the supply and the need and our ability to produce what's needed?
It takes a while to discover these things, develop these things, permit these things, and build these things. With some critical minerals, I'm thinking about vanadium, antimony, titanium. It's less of a problem because we discovered them 15, 20, sometimes 40 years ago. And the fact that the cost of capital around development is reduced, that's less of a problem. For things like rare earths, that'll be more of a problem. First of all, rare earths aren't rare. Mm-hmm. They're fairly abundant, but we haven't looked for them because the Chinese produce them so efficiently. Two problems with that thesis now. One, the environmental degradation that has accompanied this low-cost Chinese production has been horrific, too horrific for the Chinese people and the Chinese government to continue to stand. So the costs of Chinese-produced rare earths are going up very, very, very rapidly. The headwinds that faced non-Chinese producers of rare earths are melting away in the face of increased Chinese production cost. But we need to go find these things. We haven't looked for them for 30 or 35 years. There are 2 or 3 promising deposits out there, but they'll need to be drilled off. They'll need processes worked out. Construction finance will need to take place. In the case of Brazil, the Brazilian government will have to develop protocols around rare earths because they don't have a rare earth mining industry yet. You have to redo all of this from scratch. Lots of opportunity in this space in the junior capital markets of Vancouver, which have 50 years of experience in small company formation. So a real boom story for your hometown.
Now, on that note, are there some companies in particular that come across that you can think of that for investors who are looking at companies right now to invest in that might look like a good deal? What do you think?
I'm a shareholder of Meteoric, which is an Australian-listed company. I am a shareholder of Aclara, which is a Canadian-listed company, also active in Brazil. I'm looking at a host of rare earth companies, but partially it's my own ignorance around the finer points of rare earths, which has kept me from being more aggressive. Because of my own ignorance, I'm focusing on very large deposits of heavy rare earths that, while if I'm wrong, could yield me 50% losses in my portfolio, if I'm right, could yield me 1,000 or 2,000% gains. I could be more aggressive if I had more experience in the space,
right?
But I need to limit my deployments of capital to circumstances that would be extremely rewarding in the event that I'm wrong.
Well, we'll see, right? Time will tell, as always. But I think
Correct.
It's still and on your journey to sort of to learn more and whatnot. I think people too are feeling the same way. I think this is an area that has obviously the lights being is highlighting it now, and we're all kind of learning together, I guess.
I've found that there's 20 or 30 self-proclaimed experts.
Oh, yeah.
And the more I talk to them, the less I think they know. There are a few people who actually have been very useful to me. I spent an hour yesterday in a sort of a telephonic one-on-one symposium, trying to get myself up to speed. And I think that I will have advanced to the ranks of amateur in about a month.
Okay. All right.